Good morning, everybody. Thanks for joining us for How to Finance a Franchise. I am Charlie Magee with FranNet in Seattle, Washington. Congratulations for being here this morning. What I see is people come to our education webinars from all different kinds of perspectives and points of interest. Some are already well along the way and looking at a particular business, a private business, a franchise. Others are just getting started and exploring the idea of a business of their own. And obviously how to fund that business is a huge part of the puzzle. So for whatever brings you to us this morning, congratulations, and it's great to have you here. What we're going to be trying to accomplish over the next 30 minutes or so is pretty straightforward, some real kind of top-level stuff about franchising, and then we're going to get into the meat about how to finance one. I'll give you some concrete ideas for next steps, depending on where you are in your own journey, some resources that could be helpful. And I think it's good too in the front end to talk about, what can you get out of today? Now, what's realistic is you learn some new possibilities for funding strategies, and you start looking into, what those options, the pros and cons, and what might be the best thing for you should you decide to move forward with a business. You're not in 30 minutes going to get all of your questions answered and identify the one strategy and be set to go. But this is a good first step, and we've got a relatively small group, and so there will absolutely be an opportunity to ask questions. And I encourage you as we're going along to, I'm a bit of a novice on driving the controls here, but if you want to try to raise your hand, and I'll try to recognize you, but there certainly will be an opportunity for open Q&A at the end of the funding section, and then again at the end of the webinar. And others probably have the same questions you do, so feel free to jump in and participate. So great to have everybody. So first of all, who is buying and investing in franchises and in small businesses? And the answer is, all sorts of people. Just based on our data at FranNet over a recent time, sure, there's 30% that are C-level or vice president level corporate background individuals investing in all sorts of different kinds of businesses. But there's, almost a third of our clients are also from a variety of other backgrounds, people getting out of the military, spouses of perhaps business owners or corporate executives that, are looking at an empty nest and wanting to get back into doing something for themselves. And all sorts of things in between. We're also seeing more and more millennials showing interest in business ownership and exploring franchises. I've had more clients in their 30s, I would say, over the last 6 or 9 months than I've seen over the last 5 years. So that's kind of exciting. So why? Why are people investing in businesses and pursuing business ownership as opposed to following kind of a more traditional career path? And when you look at it from the standpoint of, well, what's important to different people, whether it's male or female, married or single, those with dependents or without, in general, people are more concerned about improving their quality of life than they are the earning and income potential of that business. The exception to that would be men, single men without dependents, are slightly more interested in their earning potential, which maybe isn't a big surprise. But people are coming for, really a variety of reasons. And the biggest difference, as you can see there on the bar graph, would be married women with dependents. They are really thinking about, what can I get out of the business? And they're looking for things like autonomy and purpose, mastery, in addition to the financial reward. And I think if we had an individual conversation with one-on-one and, what is the most important thing to you, the money that you can make from the business is high on the list, maybe the top of the list, but there's going to be other things too. So what are the different kinds of opportunities that are out there? And my experience is that clients are often surprised about the range of possibilities for franchises. There are thousands, 3,100 and climbing, different franchise concepts out in the world, but we work with a wide variety of the top franchise concepts within a broad range of categories. For instance, like in the health and beauty category, we've got kids concepts, we've got hair care that kind of is geared toward millennials, we've got kind of traditional haircutting concepts, and then we have pet grooming, mobile pet grooming. When you look at the fitness category, there is mobile, B2B and B2C fitness consulting. There's small footprint retail, in under 100,000, and then there's boutique, very high-end spinning concepts, for much larger investments. There's B2B, business-to-business franchise concepts in IT support, in staffing, in expense control. Some of these types of businesses you can often run without any employees. There's the food space, which when you look at the pie chart, that occupies the largest group of franchises, but it's not all of them. And interestingly, with food, we work with a fast casual superfood cafe. We work with frozen desserts and treats. And then we also have medical weight loss and nutrition concepts. So it's the full spectrum. Across all these categories, you'll see businesses that are home-based, some that are mobile, some operate out of a light industrial space, and then others are more traditional retail. From a cost perspective, franchises that we work with have a range in total investment from as low as $50,000 up to $1 million. Now, 50% of all the franchises that FranNet works with is under $175,000. I would say 80% of all the franchises that we work with are less than $500,000. So there's some outliers in that higher price point range, but there's a good cross section of businesses, home-based, light office, and retail-based in those ranges. And it's a fun place to explore. So the main focus of today's presentation is about funding. So I want to introduce Crystal Jahn from Benetrends, one of FranNet's strategic partners, who's going to share with us some ideas about common funding options for people looking at businesses today. Crystal, thanks for being with us.
Yes. Thank you so much for the introduction. So today we will be focusing on the most common funding options. As you're looking at different businesses, regardless of where you're at in the process, whether you're a little bit further along or you're at the very beginning stages, I think it's always a good idea to have a true understanding of what your options are, and you will hopefully learn something very valuable today. So having been in business for about 35 years, we've really experimented with different funding options and tried to figure out what's going to be the most beneficial options, and long-term success has been proven with both rollover for business funding process as well as SBA. And SBA is the Small Business Administration Loan. So with those two programs, either individually or independently, those have shown to be the two programs that work both short-term with being able to help in the startup phase, but also longer-term in the exit strategies and being able to run your business independently after these funding options have helped in the startup. So with SBA, there are multiple different types of SBA loans, but the most typical loan is an SBA 7A loan. So this funding range can go anywhere from $150,000 up to $5 million. And again, this is the most common for business startups and existing businesses. And then currently, the maximum interest rate is actually at a 6.75, and the calculation will always be prime plus 2.75. So the average timeline is actually between 45 days to 60 days on the lower time frame bracket. But typically, if we're looking at SBA, it will be an SBA 7A. SBA is a full documentation loan, so they will require multiple different levels of eligibility. First, because we're discussing startup businesses, we're not going to be relying on the business credit or the business being able to stand alone and qualify for the loan. Therefore, we're going to be looking at you personally. So with that, they'll look at, of course, your credit, your last 3 years' tax returns, your personal financial statement. Now they're not looking so much for industry experience. It's more so transferable management skills. So what in your career have you built up as a skill set that you can bring to the business and run that business successfully? There's potential that you may need to provide collateral, and I would say you're typically going to need closer to around 30% of your own funds for the cash injection. And what this means is it's just funds of your own that you're putting into the business. And then, of course, they're looking at your resume and a business plan. When we are looking at smaller funding range, so this is going to be anywhere under $150,000, then we can start to discuss another type of SBA loan, which is the SBA Fast Track program. The time frame for this is a little bit lower, and it's going to be more around the 45-day mark. And the qualification process isn't as stringent as it would be for a 7A loan. While the same criteria is necessary, it's not going to be as in-depth of a process, and the qualifiers aren't going to be as high as they would if you're looking at getting, $1 million loan, because the loan amount you're looking at is, of course, a lot less. So with the 7A or Fast Track, the term is typically going to be 7 to 10 years, and the interest rates will remain the same, so it's prime plus 2.75. As far as credit, I do get a lot of questions as far as, okay, they're looking at credit, and it's not necessarily the score that they're looking at. When anybody's looking at your score, that's really just an average determination of how your credit is on a number basis. But what the banks will be looking at and lenders will be looking at is really, we call it the 5 C's of credit. So character, capacity, capital, conditions, and collateral. So looking at this, once you have these checked off, it's more of a balancing act. One, you may not have as high of assets over liabilities. So the ability to repay the loan is something you may need to discuss with the lender to show otherwise, or any other option here on the list. But really what it is I just wanted to give you an idea of if a bank or a lender is looking at giving you a loan and they're looking at your credit, this is what they'll be looking at when they're determining your qualification on the credit side. It's not just about the score. With that being said, the minimum score that we're looking at with SBA would be a 680. Okay. So as far as SBA services that you can expect is, of course, you get a free pre-qualification. So there's no cost for us to tell you what amount you're pre-qualified for. There is no hard inquiry because we are doing this in-house. And then what we mean by guaranteed loan approval is if we're giving you your service agreement, we have a 97% success rate at getting you the funding amount that we're pre-qualifying for you. So you don't have to worry about just getting a random number out and not actually being able to obtain those funds for you. And then once we get your pre-qualification, we help you to package your application, and then we send that out to a few lenders that we feel will have an appetite for your type of loan or the business that you're looking at, and that way we get a few offers in, and it's a higher likelihood that you can better negotiate between the different banks that send you that offer. So that's how SBA works when you're working with a company such as Benetrends. It's not just walking into a bank and trying to get the loan. It's going to be much more difficult on a startup business to try and get a loan. So you definitely want to find a partner that will help you through the funding process. So the second portion that I'll be going over is the rollover for business startup. Now, this isn't as well known as SBA, but it actually has a higher percentage of people funding startup businesses with this option than going the SBA route, given you have the funds available. And what it is you are able to actually invest your retirement assets into your business, tax-deferred and penalty-free. And so really what this is, of course, if you were to try and just withdraw the funds yourself, you will be paying the taxes as well as an early withdrawal penalty, and that can be pretty costly as given to you in this example here. So first, you get that 10% early withdrawal penalty, which on a $200,000 example is $20,000, and then a 30% state and federal tax, which is 60% off of a $200,000 example. So really, instead of being able to access your entire $200,000, you're really only receiving $120,000 to use. And if you're using it for your business, it doesn't make sense to pay out that penalty and pay up those taxes up front if you truly are purchasing a business. So that's where we created the rollover for business funding process, or at Benetrends we call it our Rainmaker program. So what we've done is 35 years ago we created the rollover for business funding process. It is a 4-step process. In the first step, we are creating a new C corporation and a new customized retirement plan. In the second step, we're then rolling over the funds from your current retirement plan to that new corporation's plan that we just created for you. Then in step 3, that new plan is then purchasing the stock in your new corporation. So this enables you in step 4 to have the funds available in your business bank account while your retirement plan holds stock certificates to the business. So as you can see, it's a very streamlined process. We handle the entire process for you. But the most important aspect is the fact that you are able to use funds that you have saved in whatever portion you want, whatever percentage you want to use of those funds, you can, up to 100% or under, whatever you choose for the business. As far as plans that qualify, there is a very long list of what does qualify and a very short list of what does not. And there's really only two instances on which you would not be able to use your funds for the rollover for business funding process. And the first is if it is with a current employer. So funds do need to be from a previous employer. The second that does not qualify is if it's a Roth IRA. So Roth accounts just have a different tax structure. So that's really the only reason why. As far as the current employment, that's just most employers require termination prior to using retirement assets. So if you have any other type of retirement plan, chances are it's going to be a great fit for you. There are quite a few actually, benefits to being able to use the rollover for business funding option. Of course, you're using pre-tax dollars to fund your business. You can use the funds right from the start for any business expense, including payroll, so you can pay yourself a salary. There isn't going to be a breakdown of structure and a plan ahead of time, so you can go with the plan that works for you as far as starting the business and a timeline that works for you. It's very quick time frame. You should have your funds in your business bank account within 12 to 15 business days. So very quick turnaround time. There is no pre-qualification process, so no ties to your personal credit to start your business. And then, of course, you're not needing to put your home up for collateral unless you choose to do a combination of the rollover for business funding as well as SBA. But that brings another point is you can absolutely use your retirement funds as your cash injection for SBA. So as you can see, there's a lot of benefits to being able to utilize your retirement assets this way for your business. And just to bring up other points and other options that you can absolutely use for your business is if you have stocks you don't feel like you're ready to part with, you can look at doing a securities-backed loan. So this is an option where it's typically lower than an SBA loan. You can, of course, still look at a home equity line of credit, but a securities-backed loan is typically lower than your HELOC or SBA loan as far as a funding range. So this could be an option that we can discuss, or you can discuss with your financial advisor. And then, as I had mentioned, the path to success that has been shown time and time again is being able to partner or pair up the SBA loan with the rollover for business funding process. Reason being, we don't want you to over-leverage yourself in any capacity by using up all the funds you have in savings. Another option is even if you did have a substantial amount in a savings account, keep in mind those funds have already been taxed. So when you use the ROBS program, you are actually using pre-tax dollars to fund your business. So you can use those retirement funds as your cash injection on SBA, and the SBA looks at it. You have those stocks that are purchased in the business, so you have a higher stake in the game to make this business successful. So it's a great pairing, and it's a great option. Frequently asked questions. How long does the process take? So if we're looking at the rollover for business funding process, 12 to 15 business days. If we're looking at SBA, it can be anywhere from 45 days. It can go up to realistically 90 days, depending on the depth of the loan that you're looking at. How many times have we done this? So we have established about 11,000 rollover plan. And SBA, we have been doing this for, many, many years. We have been in business for about 35 years. So we have done this thousands and thousands of times. We do guarantee our services. So we have both the Rainmaker guarantee. So this is maintaining compliance as you are using retirement funds. We absolutely guarantee your process there, as well as the SBA process. We are guaranteeing that once we give you that service agreement, you will obtain those funds in the loan amount with an offer. So as far as what is included with Benetrends Services, we do your free consultation. So that's letting you know what funding options are available to you, what's going to be the direction that's most beneficial to you, and having more of a one-on-one discussion on what's going to be the best option for you, both short-term, long-term, and even down the road after you have your first business established, if you're looking at possible multi-unit concept. Once we have established that, the next step is actually obtaining your funds. And then after that, we even help with, of course, third-party administration. We can help you get other aspects of starting a business in line as well. That can be anywhere from payroll, HR services, to anything you need us to fill the gap in. As far as what makes Benetrends different is really just the aspect that our goal is to make sure that you are successful in not just obtaining your funds in the beginning, but long term. So anytime you have any questions, we are absolutely there for you no matter what stage of the game you are at. So now moving on to general questions from you guys. Does anybody have any questions that are lingering after having gone through the following slides?
And Crystal, I'll tell you what, let's, since we're getting close to the end of our time, I've got a couple more slides, and then we'll put all the questions kind of together, and if we end up going over and people want to stay on, they sure can.
Perfect.
But let's just say, quickly, I introduced myself, Charlie Magee, at the beginning, but I didn't really tell you what FranNet, who FranNet is, and we are partnered with the SBA, with SCORE, with SBDC, Women Business Centers, and what we do is we help show people how to find a proven franchise concept that's a good fit for them, for their strengths, their goals, their budget, so they can realize their dream of being their own boss in a successful business. Our service is free to our clients. There's no cost. We get paid by the franchisors and the businesses that we work with when a successful match is made, and it doesn't cost the client any more to have worked with FranNet. We use a proprietary assessment called a personal franchise assessment. Some of you on the line may have already completed this. If you haven't, it gives you like other assessments, it gives you some insight into what your kind of entrepreneurial DNA looks like, what kind of business might be a good fit for you, and it's a good starting point for our conversation. Crystal mentioned when banks are looking at your candidacy for a loan, one of the things they want to understand is, are you going to be successful in the business? And so what are your transferable skills that are relevant to the owner's role in that particular business? Maybe you come from an operations background, maybe finance, perhaps HR. Maybe you've worked in IT as a software engineer. Maybe you've been in the military. People come from all different walks of life. So what's the best way to take what you've done, what you like, and what you're good at, and transfer that to a business where you can have some predictability for your success? And we help you kind of figure out, all right, in a perfect world, what would that business look like for you? Would you have employees? What kind of employees? Hourly or salaried, skilled or unskilled? Do you want to work with other businesses? Do you want to work with consumers? How much of your time do you want to put into the business? Is this a part-time, semi-absentee play where maybe you're going to keep a job and then get a business started on the side, or you're going all in and you're going to put all your time and attention into the business? You're okay to work in the evenings and on the weekends, or maybe you want to be done, at 6 p.m. every day. So what are your goals for the business? And that really drives what are the different factors that we should consider. We put that together in what's called your business model. It kind of brings all your values and core competencies, personal and business goals together so that we can make some intelligent matches, find some businesses of the thousands that are out there, find some that really are a good fit for you. And then we have a proven 4-step research process where we refer you to the franchisors who are really going to do the job of educating you about that particular concept. With our support and resources, you're going to talk to franchisees and owners in that business to find out what their experience was and ask some intelligent questions. If you're really interested in something, you might visit the franchisor, and we'll help prep you for that visit in terms of the kinds of things you need to consider. And then working with other professional advisors, including funding, franchise attorneys, CPAs, making sure that you're asking all the right questions and getting those questions answered before you make a decision of this scope. And our goal is to help you make a confident decision. And the decision may be not to do anything. Maybe now isn't the right time. Maybe it's not a good fit yet. But as long as you walk away feeling good about your decision, that's what's most important to us. And I think that I see, this is kind of FranNet-placed clients have a better chance of success than entrepreneurs in general. 91% of our clients are still open after 2 years, compared to 64% of businesses in general, and 85% are still going after 5 years, as compared to 50% of the general new business opportunities. We also have a good track record for getting top performers within concepts, and that's something we feel really good about. If you're interested in our process and learning, what kinds of businesses might be a great fit for you, I encourage you to invest the 20 minutes to complete your personal franchise assessment, and then we'll get with you individually and see if it makes sense to continue the conversation. So I'm just over my 3 minutes over my 30. So thank you for your time and attention. And now's the time where we can take questions. So if you have something, please just speak up. I see there's a question that came in here. In my case, 100% of my savings are in a Roth. Thus, in order to provide some cash, I need to sell mutual funds, pay tax on the proceeds. If I instead use that as collateral, could I borrow 100% of my required $80,000 rather than borrowing $80,000? Okay, so that's a pretty detailed question, and I'm going to refer this individual to Crystal, and we'll get you a specific answer for that. So thanks for asking.
Yes, absolutely. I would say we can talk offline on this just because it is pretty specific as far as, and with a Roth account, we can't do anything on the rollover side. So we'll need to speak offline as far as loan options or if there, other potential there.
But thanks for your question. Now, for others, whether your question is about funding or expenses or, what does a total investment mean, we're here to answer your questions. Okay, somebody's saying something, but I couldn't quite understand that.
睇下，好似2萬幾污糟，呢啲嘢真你真係好攰啦！即係你唔該你又係嘛？你唔整過你真係冇。
Okay, I don't think that's a question. Just some background. Okay, well, feel free to reach out individually to myself with any questions, or if you want to have additional conversation, we'd be happy to help you. Thanks for joining us this morning. Congratulations again on your interest in business ownership, and just remember, we're here to help. Thanks so much.
Thank you. Hope you guys have a great day.
Thank you. Okay, thanks so much.